The market shakes. One day you're riding high, the next you're drowning in doubt. People get cold feet, money vanishes, plans crumble. For those betting on climate resilience funds, this roller coaster isn't just a headache. It's a threat to what really matters. Real impact when the world can't afford to fail. Here's the brutal truth nobody tells you enough. If your climate resilience fund can't outlast volatility, you might as well be pouring water into a sieve. No matter how noble the cause, if the capital bails or tightens with every market twitch, the communities, the infrastructure, the future you promised crumble too. That panic? That pressure you feel? It's not paranoia. It's the system grinding against you, trying to shake out the weak hands. But the fix doesn't come from hoping for a smooth ride or chasing the next shiny ESG trend. It starts with ruthless strategy and brutal discipline over where, how, and when you deploy capital. First, stop treating climate resilience like a charity project for feel-good headlines. This is survival-level investment. The cash needs to be locked down, diversified beyond the usual suspects. Look beyond established funds into under-the-radar players who work with local communities, who blend public and private capital better than anyone else. Those linkages, the messy, hard-to-scale partnerships, are what hold resilience in place when markets freak out. You have to be relentless in building those networks, not because it sounds good, but because that raw interdependence is what the system doesn't want to admit it needs. Next, forget the easy exits. If your strategy hinges on flipping investments quickly, you're gambling on instability. Climate resilience demands patience and a tolerance for slow-burning returns. Build funds that embed capital in layers, grants, concessional loans, impact equity, so some parts hold steady when other slices go sideways. Push for clear, measurable adaptability, not just green labels. This means insisting on real-time data from projects, fast iteration, and the power to pivot investments as climate impacts evolve. Anyone who's still clutching annual reports as their compass is already behind. You need operational agility baked into the fund's DNA, or watch the value collapse as external shocks come fastest and hardest. Also, listen closely here. Your biggest asset isn't just the money or the projects. It's the people you link. Founders embedded in their ecosystems, investors who understand nuance, operators who live the chaos of change every day. Fight the urge to silo these actors. Force a culture of relentless connection, of sharing failure, lessons, money, and power across silos. That's what creates the kind of momentum no market panic can kill. Those few people networked tightly become the backbone when the broader system falters. If your fund is a cold spreadsheet disconnected from boots on the ground, it will topple first. Finally, demand more of the capital partners. Insist they hold their nerve during downturns. Make them understand that pulling out now destroys value for everyone, especially the communities who can't afford it. Align incentives to lock in long-term commitment. Design gates and triggers that reward staying power, not fleeing when it gets rough. If you don't enforce that discipline, the money leaves before the work delivers. The whole point of climate resilience funds is to show the market that some bets are worth making even when others panic. If you don't prove that, you're stuck in a hamster wheel of short-termism, and the problem only gets worse. This isn't about fantasy or hope. It's raw, tactical, unforgiving. It's about building funds that are not just good on paper, but built like tanks, ready for the storms ahead, because storms will come. If you want climate resilience to mean more than buzzwords and PR angles, insist on these hard truths. This is your playbook. Diversify beyond comfort zones, embed capital strategically, bake in agility, weave real networks, and demand committed partners. Do this, and your funds not only survive market chaos, they redefine what impact investing can be. Anything less? You're just part of the noise. And right now, the world simply can't afford more noise. Subscribe to our YouTube channel and check the featured link to discover more.